Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is your weekly video newsletter. Today we're going to talk about mortgage delinquencies. We're going to talk about how to try to avoid delinquency and then what your options are if you are in a position where delinquency is the outcome. But before we do, remember to hit that subscribe button, give this video a like, and hit that notification bell. So first things first, let's just talk about delinquencies. You all probably already know that delinquencies are on the rise from 2020 to 2021. Obviously, the pandemic weighed into that massively because it's connected to employment. But that's not always the reason why people have delinquency issues, and we're going to talk about that today. One of the other common things that causes a delinquency, and it is connected to employment in a way, is the unfortunate loss of a spouse. And in cases where the primary breadwinner of the house passes and predeceases the paying off the mortgage, it leaves the surviving spouse with no ability to pay that loan, and it can sometimes become delinquent. Now, obvious things being obvious, one way to stay out of delinquency is to have a nest egg saved up and to have money in savings that you can continue making the mortgage payment and your taxes and insurance along the way, even if you do have the deceased spouse situation. The other thing that you could do is you can have a life insurance policy. And if you have a life insurance policy, when that spouse unfortunately passes away, the life insurance policy would be able to pay money back to you or to your trust in order to continue making those mortgage payments to stay out of delinquency. The other alternative actually has to do with you separating from the house. That could be something like selling the house. And if your house has equity in it, of course, you'd be selling the house and you'd be able to walk away with that cash that's remaining. And you'd have to look for a house and you could find another house to move into, but selling the house is an option. That also prevents delinquency. Now, that's just one cause of delinquency, and there are many others. A lot of times we've heard cases where it's medical, it's change of job with a big gap in between. So it's not just that a spouse passes away and the surviving spouse can't pay. There's situations where for medical causes, people actually cannot continue paying their mortgage, and there's usually some sort of way for the mortgage servicer to help you out in that situation. And that's the other alternative I wanted to talk about, because it's a little bit more intricate and it has more details, is working with your mortgage lender to figure out a way to work out the problem. Now, because of the pandemic and some of the rules that were put in place, we've been talking about eviction moratoriums for tenants who are renting, foreclosure moratoriums for people who are delinquent on their loans. Now, right now, that's all just preventing homes from getting on the market and preventing people from getting evicted. But one of the solutions that we're starting to see in the data is mortgage modifications or a workout program. Now, when you need to get help from your mortgage servicer, they can give you different solutions based on the severity of your problem, based on the value of your home compared to what you owe, based on your ability to repay, and based on what they can get done on the back end with their end investor, meaning what will the investor agree to. Sometimes that could look like tacking your late payments onto the end of the loan and they get paid later down the line, but your payments pick back up again with a new time frame. What it could look like is adjusting your note rate, which is basically the interest rate of the loan itself, and adjusting the mortgage note to reflect the new agreed upon rate. It could look like your loan completely getting modified or having some sort of partial forgiveness. We've seen situations in the past during the last housing collapse where people got some sort of loan forgiveness and a part of their loan balance was chopped off and the loan balance was reduced in order to create a new mortgage note and a new payment that the borrower could afford. And I'm bringing all these things up because obviously the kind of the best outcome here is to do everything we can to avoid delinquency. However, what we're starting to see is that the delinquencies that started last year are now becoming this year's problem. And the people that are at the front end of delinquency, the first 30, 60 days that you see in the chart, those are the people who are having a problem like right now. It's happened in the most recent history, the most recent part of their life is the delinquency. It's caused by usually a loss, or it's caused by lack of income, loss of job, change of job with a gap in between, one of those things I mentioned. But when you look at the chart again and you see how many people are 120 days late, that is evidence of a much larger problem. That means that there is substantial financial hardship and or inability to repay, and possibly even the inability to catch up. What's interesting though is when you look in between those, when you look in between the 30-day late and the 120-day late, you see a huge drop-off of the delinquencies in 60 and 90-day lates. And that's because people are doing the thing that we just talked about. They're talking to their mortgage servicer and they're trying to work out a plan. They're doing a loan modification or they're doing a workout program of some sort whereby the homeowner gets to keep the house. The servicer works with the end investor to negotiate some sort of term or change of price or change of loan balance to make sure they can accommodate keeping you in there, because it's not talked about a lot, but there's actually costs that go into taking back a home in foreclosure, getting it ready to put on the market, putting it on the market, paying agent commissions, and then selling that house. And that actually costs money for them to do that. So when they're looking at what they might or might not do, that does come into consideration. And I think that's why you're seeing this huge drop off in between the 30-day late and the 120-day late, is because mortgage lenders are seeing an opportunity to keep people in their homes and work out a plan. One of the things that they're not talking about a lot is the government forcing servicers to come up with more creative ways to keep people in their homes. You know, it's important that the government took the steps they did to initially keep people from getting evicted or foreclosed on. But as the economy continues to grow back and people go back to work and we start seeing some spending happening again and businesses reopening again, you're gonna start seeing more pressure that the government's gonna apply on the servicers to make it work out. And right now, I think we're starting to see, this is like the first time I've really felt that we're starting to see that in the data from the graph that I'm showing you today. So that is what I think is kind of behind the numbers, the story behind the numbers. When you look at all the pieces and you read the headlines and I dig into my industry articles, that's what I'm seeing. And I think in the next couple of months, you're gonna see even more pressure by the government and the CFPB on the mortgage servicers to work it out with homeowners, to fix it. Even though they didn't necessarily cause the problem, the government is definitely asking them and expecting them to step up and come up with solutions. So it's going to be an interesting story for us to kind of follow and see how that kind of unfolds over time. But it was really important today for me to be able to talk to you a little bit about how we can try to avoid delinquency. If you are in delinquency, what you could do about it. And then also just from an industry perspective, what might be coming up ahead. As always, if you have any questions, something that we at the office can help you understand about your specific situation, or maybe you need to send this video to somebody who you know they're having a problem that maybe we could at least just chime in and help with, please feel free to forward them this video. Let them know there is help available. We want to see people maintain their home ownership if they already have it, and we want to see people achieve the goal of home ownership if they're still renting. So in either of those situations, please let us know how we can help. Thanks again for watching, and we'll see you again next week.